No rest for the weary. Fresh after dealing with the U.S. midterm elections, investors have to think about the Federal Reserve. Here are the Fed expectations for the November meeting of the U.S. Central Bank. 90% of our panel says no rate hike in November. 85%, though, expect that rate hike in December. So some pretty good certainty around a fourth rate hike for this year. How many next year? 2.5. What does that mean? It means pretty much good agreement on doing 2, and about half of the panel of 30 say they're going to stay at 2, and another half say they're probably going to do 3 next year. Let's put all these quarter-point rate hikes together, and I'll tell you what it all adds up to. We'll end the year at a Fed funds rate. That's the overnight rate the Fed uses to adjust the overall economy at 2.4, going up to 3. Then we stay there, and eventually, at some point in time, the panel believes the Fed gets a little bit restrictive by a quarter point and ends its cycle at 3.3%. Now, remember, hiking rates is just one of the things the Fed is doing. It's also reducing its balance sheet. If it stays on course, it'll reduce its around $4 trillion balance sheet by $600 billion. We asked the panel, what's that worth in rate hike terms? Well, 15% say it's less than 1 hike. 32% say it's equal to a single quarter-point hike, and 32% say it's really 2 or 3 hikes. The average is 35 basis points. So in your mind, when you think about how much the Fed is going to do next year, it's the rate hikes, maybe 2 or 3, but then an additional $600 billion reduction in the balance sheet.